Yep, all that sounds good. The bank? Buy it. G'day guys, Jay Senior here, and welcome to another episode on the Australian Wealth channel. Now look, the title of this video is a little bit clickbait, but that's what you have to do if you want people to be watching your videos. You know, you need to have a little bit of clickbait so you can create some interest. But it is true, I did buy a bank, but I did not buy the whole bank. So I just want to talk about this particular investment and why I think it's going to be a great one going forward and what this means for people that are looking at investing in banks. So let me give you guys a little bit of backstory. So I am now in my 30s. I turned 30 in August. And that means that over time, my investing strategy does need to change just a little bit to prevent any kind of major catastrophes in my portfolio. Because, you know, the older we get, the less risk we should take on. It doesn't mean you can't, but, you know, over time, your investing needs to grow with you as a person. So in your 20s, it's fine to take a fair bit of risk, I personally believe. But, you know, as you start to mature a little bit, then you want to be making safer investments. And this investment that I've made, I personally believe is going to be one of the safest investments going forward outside of buying an index fund. So of course, you need to do your own research. Do not take my word for it because I'm just a dude on the internet. Everyone knows that. So do your own research when it comes to investing in companies. But I want to explain why this particular bank is a personal favorite of mine. So the name of the game, as you start to get a bit older, is diversification. You want to be investing across the board just a little bit more so that if one sector has a lot of trouble, then you're not completely blown out of the water. And that's what I've done here. And the reason that I've chosen to go with the banking sector this time is because interest rates are at an all-time low. And what that means is that inflation is going to be pushing up just a little bit. That's what's expected and that's what we are seeing. So that means that interest rates over time are going to be just increasing a little bit, and that means more money to the bank. So what I wanted to find was a company that was very broad, that managed assets, you know, did a lot of capital allocation, also had private banking and had retail banking, and was exposed across all of those sectors of the financial sector. Because I think going forward over the next few years, a lot of these banks are going to be in a real position of strength. And that particular bank is Macquarie Group. Now, Macquarie Group, I believe, is one of the best banks in Australia. They're an Australian multinational independent investment bank and financial services company. And Macquarie is actually the world's largest infrastructure asset manager and one of Australia's top-ranking banks with more than $595 billion under management. That's a lot of money. That is a huge amount of money that Macquarie looks after. And this is a company that is just over 50 years old. So to be accumulating that amount of capital in this amount of time, it's pretty clear that they're doing something right. One of the reasons that I like Macquarie Bank is that it's a company that has a number of different growth vectors. These include asset management, managing nearly $500 billion worth of assets on behalf of superannuation funds and other institutional investors. And they also manage assets across infrastructure, real estate, agriculture, energy, equities, fixed income. You know, they're very broadly diversified, which is very important. On top of this, they have retail banking, wealth management, private banking, so many other banking services for over 1 million clients. So we're not looking at a small fry here. This is quite a large company that we're talking about. Macquarie Bank also has a division called Macquarie Capital, which is basically what you'd expect. They're looking for growth opportunities that they can invest into. So Macquarie Bank is an incredibly well-run institution, and we're seeing year-over-year consistently strong growth headed in the right direction. We're not looking at like massive 50% every single year kind of growth, but we're seeing consistent improvement and a company that continues to go from strength to strength. And something else that I really like about Macquarie is they're continuing to buy. They're not looking at offloading assets. In fact, they just did a capital raise of $1.5 billion, which I'm going to talk about a little bit later in the video because it's actually quite important to my particular investment in Macquarie, to have more cash on hand so that they could go and invest in future products because they see so many opportunities, which I like. Now, of course, before investing in anything, it's very important to be having a look at the financials and what's going on there. So let's delve into that. So revenue this quarter was about $3.93 billion just in the quarter, which is up 42% year over year, with a net income of $1.02 billion for the quarter. So that's $1 billion that went straight to the bottom line just this quarter alone. So EPS for the quarter is $2.73. There's a current valuation of this company of $78.32 billion on a yearly net income of what looks like is going to be about $4 billion this financial year. So if you wanted to buy Macquarie outright, the valuation of that particular company right now is $78 billion. So it's not a cheap company at all. You know, it's a lot of cash that you would have to come up with to buy that outright. But of course, we can buy bits. So to work out whether this company is actually a good buy or not, we need to work out the PE, and in my case, I'm going to be working out the forward PE, what the company is expected to do over the next 12 months. So we use the share price, which is currently $208 as of recording this video, and divide by anticipated EPS, which in this case, I'm using 11. I personally believe that this is just a touch conservative, and it could be a little bit higher. I think that the number will very likely come out around there. So if we do that calculation, we divide 208 by 11, then this gives us a forward PE of 18.9. So I like this valuation based on what Macquarie Bank is doing. It's great considering that the current PE of the ASX, the Australian market, is about 26. So what we're seeing is that this company is actually trading lower than what the market is trading at, which I like a lot, considering that they're one of the strongest financial institutions and their growth is significantly higher than what the rest of the ASX is seeing. For me, that looks like undervalued. And hey, look, I could be wrong. Who knows? But that is just what I see. Now, on top of this, Macquarie Bank is also paying a juicy, nearly 3% dividend. And everyone loves getting those juicy dividends, especially if you have a lot of money in the stock. So looking at all these figures, this is just one that makes perfect sense for me. You know, we're getting the stability of a huge multinational company with excellent growth with a very fair valuation, in my opinion. And that makes it for a really solid investment for me. Now, of course, you do need to do your own research when it comes to investing in companies. I've loaded in about $6,000 so far to Macquarie Bank. And even in that time, we've seen a fair bit of a rise. You know, we're up about 7% on that position. But I mentioned the capital raise a little bit earlier, and this is something I want to talk about. And this is something that makes me quite bullish on Macquarie going forward. So as I said, Macquarie raised $1.5 billion from institutional investors only a few weeks ago. And this was fully subscribed, this placement. They got all the money that they wanted to get from institutions. Now, Macquarie Bank has actually offered this same purchase plan to all of the retail investors that are invested already in Macquarie Bank as well. So I actually got a letter from the company which offered me the opportunity to buy up to $30,000 worth of shares at a discounted price. Now, the price of the offering is around $191 a share. And what we're seeing is that the share price is now trading at $208. So it has gone up significantly, but of course, this will be offered to current shareholders up to the value of $30,000 worth of shares. And this is actually something that I've taken advantage of because my cost basis, if I have a look at Macquarie Group here, the cost basis that I had to pay for Macquarie Bank was around $195. So I'm actually getting offered these shares cheaper than what my initial purchase price was. So far I've put in $15,000 into this share placement, and those shares will become available on the 3rd of December to trade. Of course, the offering closes soon, but seeing that the price of Macquarie Bank continues to go up, it's very likely that I'm going to load in the other $15,000 so I can make that a $30,000 position in new shares that I'm going to pick up. Now, the wonderful thing is those shares are getting we're getting at a discount, which means that we're automatically in profit straight up just from buying a company that I was already going to be buying. So this will make my position in Macquarie Bank quite significantly larger. Now, some of these shares I might be able to sell off, but I don't think I'm going to sell off all of these because the growth in the future, I believe, is going to remain strong, and so is the stock performance personally. So when companies are doing capital raises, it's not always the worst thing in the world to have a little bit of shareholder dilution, because it means that they can invest in more projects. And if they're making more money from that then gets returned to shareholders, then at the end of the day, it's a win-win. So for me, Macquarie Bank is also a great inflation hedge. Knowing that they're across the capital markets, they're also a bank, which means when interest rates do go up, and they very likely will go up rather than go down, then this means that the banking side is going to be making even more money. So it's a win-win. If interest rates don't go up, then the capital markets are going to continue to perform exponentially. And if interest rates do go up, then they're going to be making a lot more money on the banking side. So it's a great way for me personally to not be holding cash and to be protected against inflation. So I'd really like to know what you guys think about Macquarie Bank. Is this one that you'd considered before? Do you have any investments on the ASX? I'd love to hear them. So if you'd like to get yourself a free stock, I have a link to Stake in the description. Sign up, put some money in the brokerage, and you will get yourself a free stock, which is great. And if you'd like to track your net worth, then I have a link to WeMoney, which is a fantastic company where you can track that. They'll give you $5 just for signing up, which is fantastic. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. We have some exciting things coming up, and we actually have an interview with a very, very prominent real estate professional in the space. So I'm looking forward to that interview, more to be revealed. So thank you guys so much for watching. Please make sure you like and subscribe. Do it, subscribe, and we'll see you later.